Shashank Kanodia, CFA and research analyst with ICICI Security joins us. Let's take our conversation. Gurmeet's also ready? Yes. Hello, Ji.
Thanks, sir.
So, subscribe, avoid, keep it for the long term. Gurmeet, what's your view?
So, nothing from Nikunj, from an immediate gain perspective. I think the grey market premium is reflecting that. And Korean makers globally command a single digit earning multiple for multiple reasons. One is the internal ecosystem they have in terms of, I won't call them related party, but, in terms of the procurement and other stuff they do. So if you see for Hyundai, of top 10 vendors, 35% is internal, which is, your Hyundai Mobis, Kia, and others. Secondly, it's completely OFS. What is worked for them is that if you see their asset turnover, that's about 10x versus 7-8x for Maruti. If you see it's almost negative net working capital, they take 2 months credit, and in terms of dealer inventory and others, they give lesser credit. So it's very this is more like FMCG. If you see last 3 years in terms of what has been their ROCE, what has been their overall cash flows, it will tell you probably looks like an FMCG IT kind of a business. 15% market share. And best part is that UVs now make up two-thirds of the portfolio, and others are still getting in there. So I think the big trigger in long term which can come is the selling of plant they acquired from General Motors, and that is where probably they want to make it as an export hub that will take their capacity up by 2.5 lakh units. And they have shut down few facilities in China. Some of it is geopolitical, some of it is more strategic. And if they want to make this as an hub, because exports are almost 25-30% of Hyundai revenue. So I think it's a decent stock for a long term. No excitement, nothing immediate what we are seeing with IPO. So there's no compulsion to subscribe to an IPO. I would be happy if I get it a little cheaper from current, let's say 25, 26 times. But overall, I think a very steady company with a realistic expectations. If you have, you may add in the portfolio.
Shashank, everybody is comparing Hyundai with Maruti, but is it an unfair comparison because Maruti's market share is 40% plus, Hyundai's market share is 15%. Maruti's got a huge advantage in terms of distribution. Maruti's got a huge advantage in terms of the brand they have. So do you think one should not compare Hyundai with Maruti and say, okay, Maruti is X and this is 0.8X, so one should buy it, Shashank?
Yeah, so the market share difference remains, but the point we have to take is the long runway of growth that is available for Hyundai to largely capture in India, right? So despite it being one of the largest automotive markets, we have just got 26 cars per thousand people in India versus 200 for China and maybe 500 and above for the developed nations like US and Europe. Secondly, these guys have largely driven the SUV drive in India, right? So as a percentage of sales domestically, we largely drive 60% of sales in the SUV segment, but for Hyundai Motors India, it's been roughly 63%. As Gurmeet mentioned, they consistently have between 20% of exports vis-a-vis the rest of the counterparts, and largely in terms of margins. So these guys are largely kind of a margin profile with 25% plus kind of don't really have much of a choice because if you consider maybe Tata Motors, M&M, and Maruti, so Tata Motors has a JLR as a leg, which is the largest of the pie, and for M&M, it's largely the tractors and some of the parts which comes into play. So I think we really don't have much of a choice when is kind of a direct comparison to Maruti. And some of the positives which stand apart for Hyundai vis-a-vis Maruti has been the higher share of SUV sales, the higher margins that they realize, and as well as the greater share of export that they do.
Gurmeet, when a company goes public, it uses cash to build up business or pay debt. In this case, that is not going to happen. Hyundai is going public at a time when the auto sector has seen strong representation from other auto companies. Tata Motors listed, Mahindra & Mahindra is listed, Maruti is listed. So do you think there is no scarcity premium? There's nothing which changes in the business even though they're going public. So from that vantage standpoint, this is like a IPO which is good to go public, but not something where the business changes dramatically.
No, I agree with you there. And as I said, there is some concern on if you see the cannibalization which can happen because of Kia. And there are a lot of variants, especially the variants in the mid UV segment, which is 12 to 20 lakhs, where there is some bit of overlap in terms of the models. But one benefit with Hyundai has been that they are always ahead of the curve with their platform they have, which is Hyundai Auto Ever. in terms of latest technologies. They have this uncanny ability to come up with good-looking cars, at each price segments. So you get, those are the things which are there. I think on the contrary, Maruti was the only pure, PV play. M&M and Tata Motors have other businesses also in terms of SOTP basis. I think it may be a little negative for Maruti because there's a pure PV OEM play, which now you have probably two players. And I agree with you. So it's a decent IPO. It's nothing spectacular. It's not that you have to immediately rush, and that's probably what the grey market premium is telling you. Also, I think the size is too large. I think moment they made it 27,000 crores, the grey market premium started coming down, and Hyundai global market cap, and now what market cap they are coming in it. While India contributes what 10-15% to the global numbers, the market cap would probably be 40-50%. So that just tells you, that how Korean makers are valued. So I think it's I'm neutral on it. I mean, you can subscribe to it also, but I'll be happier if I get, as I said, slight more price correction in terms of entry discount.
Right. Shashank as well is back with us. We lost you a little bit there, Shashank, but you were making the point about Hyundai and how it stacks up against the peers.
Yeah, so you really don't have much of the pure play players listed in the Indian TV space. So if one wants to, as an investor with a long-term horizon, you really one wants to have a play on domestic PV space. You've just got Maruti as an option before. Now you have Hyundai as an option. You can see a good amount of shift happening from institutional side, from maybe Maruti to Hyundai. Even they have a superior product slate. Their margins, the return ratios are better. So I feel it is here for a good term, and it's a decent issue to subscribe to.
Right. It's like someone was saying that either the issue size is so small that you don't get any allotment, Nikunj, or then it's so big that you don't expect any listing gains.
No, actually, that's not true. I mean, Bajaj Finance was a reasonably large issue. It created a market cap of 1 lakh crore plus. Hyundai at the peak is going to be creating a market cap of 1.25 lakh crore. The point is that with Bajaj Finance, it became like a scarcity premium because HDFC Limited got delisted. It got merged rather. It became the port of choice. Second, when they went public, market conditions were different. Yeah. See, the sector per se is going through a cyclical downturn, which is visible in PV car sales. And my point is that what is the Hyundai story? Is it unique about company something? Are they at a breakthrough moment like Mahindra and Mahindra where SUV market share went up? Are they at a breakout moment, breakthrough moment like Tata Motors where JLR operating leverage and EV comes in? So there is nothing very unique which could be called as distinctive about Hyundai. So Hyundai is a bet on India. It is a bet on car penetration. It is a bet on big picture, and it is a bet on efficiency. If that is the whole scenario for Hyundai, then you would say that, okay, here's a stock where if I have to choose, it's my judgment whether I want to choose between Maruti or Hyundai or Mahindra and Mahindra. That's a judgment call. But you may at best expect market beating returns or mild outperformance. This is not going to be like a swang of a listing or 50% up. You get it on day one of listing, you say, okay, I've got a lottery. It's not going to be that OMG moment. That's
market conditions also have changed.
Market conditions, company size, there's nothing unique. All the companies which have gone public so far, money has gone back into the company to build business. Here the promoters are taking cash back. So and then there's a whole royalty issue which will keep on coming up again and again. Right. So there are a lot of other factors.
Gurmeet, I think, agrees with a couple of these points. Gurmeet, you want to come in?
No, as I said, royalty they will be going up to 3.5%, which takes them closer to Maruti, and which is a bit of always an overhang with, and we've seen that what's happened with Maruti movement whenever they have increased royalty. Second is, as I said, the conflict with Kia, and there is a perception on Korean companies having an internal ecosystem in terms of sourcing. So I think the localization also market would want to see in terms of transmission, in terms of engines, in terms of powertrains, etc. One good thing, however, is that it's probably the only player which is strong in each powertrain. So you have the IC platform. They are launching two CNG variants this year. On EV, they already have two models, which is Ioniq and Kona, and they probably will come with Creta EV, which I think Creta has been one of the best-selling UVs. And if they can come up with a nice EV variant, that can give a bit of a fillip to the numbers. And then they are having a hybrid platform as well. So across powertrains, you have the product. They are leaders in innovation and in terms of adding more features. Even in second-hand auto sales, now in India, 1 out of every 4 car is now a used car. They are making good inroads there. So they're present across the powertrain, and across the range. And I think that's what probably gives them an edge with kind of the valuations they have. But as I said, happy to get it on a dip rather than in a rush to buy right.
Shashank, just one quick word. We were talking about this risk of the potential increase in the royalty rate by the parent company. How much of a risk is that?
Yeah, so currently, I think even Maruti pays 53.5% royalty with Spirit, right? And effectively, what we've been given to understand that the royalty rates are increasing from 2.3 to 2.7% for Hyundai. So that is something which is already disclosed. So I think it's not really a potential risk. And it's been seen across the MNCs that these guys charge a decent amount of royalty for the R&D support that the parent provides, as well as the market access that the parent provides to the Hyundai Motors India in terms of export play. So we have to understand this fact. Cumulatively over the last decade, Hyundai Global has spent roughly $26 billion on advanced technologies like electrification, ADAS, and roughly, India has Hyundai Motors India have exported roughly cumulatively is the largest exporter of passenger vehicles, exporting more than 36 lakh odd units over the last decade and since inception. Wherein Hyundai Motors globally with their sales network of more than 190 odd countries help them in their part. So I think we don't really see much of a risk to it. But as Nikunj said, we would agree to this point that the issue size is fairly large, as well as the valuation at which it's command. It is kind of coming in terms of 26 times trailing price to earning. The listing seems to be limited, but over the medium to long term horizon, I think we can certainly look at this issue.
Medium to long term, no debate. There are three things there. I just want to put these facts on table. That one, we are talking about IPO pop, which may not be the story. Then we are talking about the company. Well, it's fantastically. The franchise needs no introduction whatsoever in terms of the power of the franchise, the market share they have, the return ratios they have, and the corporate governance. Third is the big picture, which is that Indian auto sector in terms of penetration level from China, other developed countries, we have a long way to go. And fourth is efficiency. If you compare that with, let's say, Maruti and other peer companies, I think Hyundai has an edge up. So this becomes more like a medium-term investment idea rather than an IPO pop. On a 20,000 crore IPO, you are unlikely to see a pop any which ways because the other issues have been very small. I mentioned Bajaj Finance, but I just realized Bajaj Finance was 3,000 crore. This is 20,000 crore. So if you are in for a long haul, then this could be a joyride. But in case you are expecting that the car is going to be flying, it's not going to happen. This is a car company, and in car company, they will have to deal with the real issues, which is traffic, valuations, and market conditions. But in the long haul, I guess this Hyundai as a company has potential to outperform the market and also create superior compounding wealth. That's the limited point.
Oh yeah, absolutely. But Gurmeet, Shashank, both of you, thank you so much for taking the time out and speaking with us today.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits. And then break right through them. Become something more. It's my time to rise.
Hyundai Motor India Limited now proposes an initial public offering of its equity shares. The 100% book built offer is being offered at a price band of Rs 1,865 to Rs 1,960 per equity share of face value of Rs 10 each. The anchor investor offer period opens and closes on Monday, October 14th, 2024. Offer opens on Tuesday, October 15th, 2024. Offer closes on Thursday, October 17th, 2024. For risk involved and other details, please refer to the red herring prospectus, which is available on the website of the company, SEBI, BRLMs and the stock exchanges.